Hey everybody, it's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Tuesday, April the 28th. In this video, we're going to talk about the stock market, we're going to talk about cryptocurrency, and of course, we're going to talk about, mainly Bitcoin. May also touch on some altcoins throughout the video. But before I jump into the content, please do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel, and make sure you click that bell icon to get notifications when I release new updates. So the first thing I want to do today is I want to start with some stock stuff, and then I'm going to dive into the crypto stuff, and we're going to go through a couple different charts, and I'm going to go through a couple different chart patterns. And the reason that I wanted to do this video, instead of just doing like the weekly updates that I've been doing more during this whole COVID-19 stuff. I wanted to do these videos more often because I think these are really dangerous times in the market. So that's the reason I've been doing that. So let's pull up some charts and let's take a look. So this is the first set of charts that I want to take a look at. Now what we have is we have on the left hand side, I've got a monthly candlestick chart for the Dow Jones. And on the right hand side, I have a daily candlestick chart. Okay. If you guys remember, if you've been watching the channel, or if you're new to the channel, you may not have seen it, but a few months back, toward the beginning of March, I had actually posted a chart of the S&P 500. And at the time, what I had said was that we really needed this to come back above this purple line. And at that time, what had happened, we were in March, and it had, we had broke through, but we were starting to turn back up. And so I had said, hey, look, we need to get above this. We didn't. We collapsed. Okay, and so what we got was that big 30% pullback in the stock market. But what's happening now is we've had this huge rally. A lot of people are obviously getting very excited, and if you're looking at like the news coverage of the markets and things like that, even the experts are a little bit nervous right now, and they're basically saying that it seems like people are betting on things not being as bad as what they seem. And I think that really comes down to the fact that there's a lot of different information. I don't know who's right and who's wrong, but there's a lot of different information about how bad COVID-19 actually is. There are some experts who say it's, worth shutting the economy down. There are other experts who say that it is a mistake and we need to get people back to work as soon as possible. My personal opinion on it doesn't matter, okay? I don't know that the way it's been handled is the right way, but what I do know is when we look at the data, when we look at what's happened in China, for example, once they started lifting the lockdown, the economy didn't go right back to normal. People were still very nervous. People are, they're still very concerned, and so they're not spending money the way they were before COVID-19. And that's the problem, okay? A lot of people don't understand this. And I don't understand like the intricate details of it. I really don't. I don't have an economics degree or anything like that. I'm a trader, so most of what I do is based off of charts. But in the research that I've done, my very layman understanding is what led to the Great Depression was actually deflation, and not inflation, but deflation. And deflation occurs when people aren't spending money, essentially, when they're afraid. So when I think about that, and I don't know whether this is going to get better soon or not, but what I do know is if it ends up playing out like China, then people are going to be, concerned and afraid to spend money. And if they're afraid to spend money, that leads to deflation. And of course, deflation is what led to the Great Depression. So I don't see any scenario where the stock market continues this rally. Okay. I believe with everything that it's a dead cat bounce. And so I wanted to explain why I believe that. And then I'm going to show you the chart that actually supports that concept. Okay. I could be wrong. All right. That's absolutely possible. And if I'm being totally honest, I hope I am wrong. So for me, if it dumps to crazy lows, I can buy those and it would probably be a game-changing win. It's not worth it, right? It's not worth watching hundreds of millions of people suffer so that I can get a payday. when we look at this chart, this is an S&P 500 chart. And what we have is we have this trend line that started back in February of 2009, essentially the bottom of the last recession. And this was our low touch here in December of 2018 when we had what a lot of people at the time thought was the beginning of a crash, right? Ended up being a correction, and it just, I don't even know that I would call it a correction, but it ended up being nothing more than a blip, and then it, resumed its uptrend, okay? But we've broke below that support line, and what we've actually done right now on this S&P 500 chart is it's coming up for a bearish retest, okay? So we need, and I say we because we all should want this to happen. I don't think anybody should be rooting for this to go down, right? We need the stock market to come up and close above this line, okay? This is a monthly candle, so it's going to close in just a couple of days, literally 2 days from now. This thing's going to be closing. We need it above this line. We don't want it closing right at resistance on a bearish retest. That's a terrible sign. Usually when you get that, you get this, and if it closes on a resistance, you typically get more downside. And, if that's the case, then what this means is this could be a trend. It could be a downtrend. And if this is a downtrend, and remember guys, I know you want to watch, a lot of you are like into crypto and you're like, I don't do stocks. You need to do stocks, right? You need to at least understand the stock market and be paying attention to the stock market, because all this has ripple effects in cryptocurrency, all right? So if this ends up becoming a downtrend and we draw a trend extension, this is scary stuff. Look at this. Points down around 1700, okay? And that's on a non-log chart. If we put it on a log chart, it's going to be down around 1886, all right? Now, if you look at that, it lines up fairly, it's not exact, but it lines up fairly close with those old levels of support I've talked about in previous videos, down around 1550. And that's the reason that I think it's very likely that if this is a downtrend, I think we're headed there, okay? And so if we're headed there on stocks, unless Bitcoin can suddenly grow legs and decouple, it's going to go down, right? It's point blank. It's not going to, it has to either decouple and really rage, right? Or it's going to go down. I don't think there's any world where it just goes sideways, all right? So this is what I would watch if you're watching this. Draw this line. It's a very simple line to draw. Just draw it from the low in 2009 to the low in 2018, okay? And then watch where it closes. And if we zoom in, because we want to make sure it's right, see, it's perfect touch, perfect touch. It's not drawn with any type of bias. It's not drawn with any type of intent. It's just touch, touch, trend line, right? And now you can see that it's touching here. It was above it, right? It was sneaking above it on this wick, but now it's starting to pull back. So that's what you want to watch on the S&P 500, okay? If we go over to the Dow Jones, it looks really bad, okay? So I'm going to put this on a single chart first, and then we'll go over the other side. So this is a monthly chart on the Dow Jones. It's similar, right? Except in this case, we're drawing a trend line or a resistance line from the top in 2018, and we're drawing it down. We've got our 3 touches, right? So here's our 2 touches that formed our trend line. Here's the 3rd touch, which for those of you that watch the channel know that that's one of the signs I like to see before I go into a position. So for example, this is a position that, I want to be looking for shorts. And of course it had the nice little pullback, right? There next month, almost 7% down. Went back above it, had a bullish retest. So this line's valid. We can see it's valid. It's being very well respected. Bounced off of it, collapse. And now if we look, here we are, we're retesting it. The good news is right now on the Dow Jones, it's actually sneaking above it, right? Which is good. We want it to close above it. We don't want that to pull back underneath that line, okay? So if we go over to the other side of the coin, this is where it gets sketchy. This is a daily chart on the Dow Jones, and what we have is a rising wedge, okay? And rising wedges are bearish in nature. They're always bearish in nature. It doesn't matter whether price is moving up or whether price is moving down. If it's moving up and you go into a rising wedge, it's still bearish. If you're crashing and you suddenly get a rising wedge, it's a counter rally, right? It's a sign that there's more downside coming. That's literally what it means, all right? But it's not confirmed until it actually breaks out of it. And you don't want to just watch for it to break out of the wedge itself. You really want it to break the previous low. Okay, so if this trend line is drawn using this low here, if this starts to break out of this, if it breaks that low down around 22,941, or you can draw it to the close if you want to, but I would just be safe and draw it to the tail, right? If it breaks that, that's a confirmed breakout of the rising wedge, which is absolutely bad, right? It's bad. It points to more downside. And of course, the way rising wedges work is you just measure how tall they are, basically. This one's a little bit difficult because it doesn't really have a good point back here, but it gives you an idea, right? Basically, more times than not, you're just looking to come back down to where the wedge started, all right? So it could be that it doesn't come down any further than that, but the problem becomes if we break out of that wedge and if we start falling, then this is going to fall too, and we're going to be back underneath that monthly resistance, okay? So that's the Dow Jones, and this is the S&P 500, okay? So with that as kind of our backdrop, and knowing that the economy is still shut down for the most part, they're saying in a lot of places they're going to extend this through May, right? Which means even people who did have a little bit of savings and have been holding out and making it, they're going to start getting squeezed tighter and tighter and tighter. Businesses that were just barely hanging on, more businesses are going to close. I read a report a few days ago where 26 million Americans had filed for unemployment in the last 5 weeks, right? You're talking, that's almost 10% of the population, counting men, women, and children. We're not even talking about just the adult population, right? It's a massive number of people that are suddenly out of work. If they're out of work, that's a strain on the government, but that's a side note. The problem is if they're out of work, they can't afford to spend money. If they can't afford to spend money, again, it all goes back to what I was saying at the beginning of the video. That's how deflation occurs, right? And it's weird. It's kind of counterintuitive because you think to yourself, wait a minute, deflation, doesn't that mean my money's worth more? Yeah, it does. But the problem is it's bad for everything else, so it ends up leading to crashes, right? And the way that you get out of a crash is the government starts to inflate the money by printing money and other means, right? They create inflation to kind of try to bring the market back up. And then your money, of course, loses value, right? So bad deal all around. So that's, kind of the stock picture. So if we go over to Bitcoin after knowing what the stock market looks like, here we are, right? Holy cow. Same thing going on. We're sitting in this rising wedge, right? This is why for anybody to say that, oh, well, Bitcoin, it doesn't follow the stock market. Are you kidding me right now? Right? It's followed the stock market more closely over the last 2 months than I've ever seen it. This is, instead of doing what it was supposed to do, which was do its own thing, right, and act as a hedge against the traditional markets, all it's done is just act just like the market, just like traditional markets, right? Which is bad. It takes away part of its use case. But all these different lines on here, basically what I'm watching the most, I'm watching this rising wedge in RSI, which yesterday we closed right at the top of resistance, and I'm watching this rising wedge on price. And just like the rising wedge on the stock market, it's not just the yellow line that it needs to break through one way or the other. If it's going to break down, if it's going to confirm itself as a bearish pattern, it needs to go down and break basically this point here, right? Down around $6,700. It could still go down, break out of this, set a bear trap, and keep going up, okay? But if it breaks this line down around 6,700, it's pretty much game over, all right? Nothing's a sure thing. Even then, it wouldn't be a sure thing that it's going to go down, but more than likely, right? So it looks like a mess. It's like if you look at this and you don't know what you're looking like, it's like, holy cow, there's lines everywhere. So what are all these lines? Well, the first line, this blue line here, that's the 200 moving average. Talked about it in lots and lots of videos. It's sitting around in 79.74, okay? It's very normal when you get a break through the 200 to come up and retest it. So unless we can break and close above that, I would expect it to be a bearish retest if we even get there. So I'm going to turn that off. We have the 61.8 golden pocket, which is this purple box. Also happens to be sitting right around $8,000. We have the trend line that started back in February of 2019. Goes up. You can see here it was support through here. It was support right here before it cut through it. And if we come up and hit that from the underside, that would be a bearish retest unless we can close above it. That's sitting around 8,000 to 8,100 depending on when we hit it, right? Or a little higher if it goes out further. All those things are converging, okay, along with the top of this rising wedge, which is currently sitting around 8,000 also. And then we have this downward sloping orange line, which is the resistance from back in February's high, right? And it's sitting right here around 7,900. So we have all of these things converging saying, holy cow, this is, resistance basically. And this vertical yellow line is just the day that the halving is supposed to happen, which is currently scheduled for May 12th. Okay, so again, with rising wedges, typically what we're looking for is a breakdown toward the start of the wedge. But the problem is just like in the stock market, if this starts to break down, it means that we're probably in a downtrend, right? And if we're in a downtrend, then all we have to do, and by the way, here's another thing: 19-week moving average, right? Slammed right into it, acting as resistance. If we are in a downtrend, then we can just measure this with a Fibonacci retracement. Sorry, not a Fib retracement, a Fibonacci extension. And we go down, we go up. Right now it's 7810, could go a little higher, but that gives us a target down around 1146. Okay, if it can squeak up there to around 8 grand, it's going to change that target, be down around 13 to 1350-ish. Okay, which again, I talked about this in past videos, so I'm not going to beat a dead horse. Essentially, that lines up with the old highs in 2017 that, it started to run off from there and went parabolic and didn't retest it. So this is coming up and retesting it and then moving up and retesting, right? This is where things got squirrely. It started to come back down and then just moonshot. So would be completely normal market behavior to come back down to that level. And if the stock market moves back down to its, old levels, that's what I think is going to happen with Bitcoin. All right. This just counter trend rally. If we zoom in on the smaller time frames, we actually have a rising wedge on the 4-hour chart too. So we're not talking about the giant rising wedge that's been going on for 3 or 4 weeks. I'm talking about the rising wedge just on 4-hour, right? And this is the one that started back, about 2 weeks back. And so here it is going up, and we actually fell out of it earlier. Okay, if you look here, fell out of it, came back up, closed right inside of it, and then we have this little bearish retest here. So this is looking pretty sketchy right now, but it's not confirmed yet. Okay, what we're looking for to confirm that is we're looking for price to break below 7,450. So on the more zoomed in time frame, if we can break 7,450, okay, if it goes down through that, then I would expect, okay, let's go look at the daily chart, right? And the bottom of that daily chart right now is sitting around 73.59. So then I would start watching it and see if it breaks down toward this level, towards 6,700. Okay, that's what I'm watching right now. I don't see any reason to be bullish. Okay, I really don't. I mean, there are reasons. Like you could go out and you could grasp at straws and say, well, there's kind of this or kind of that. But overall, if you're just going by strict technical analysis, it looks bearish. Then you add in the fundamentals of what's going on globally, and it's like, oh my gosh, the numbers are absolutely terrifying. I mean, really, they are. I'm not talking about the COVID-19 death rates or anything. That's a whole other story. I'm talking about the unemployment numbers and the economic numbers. They're absolutely, just terrible. So, and again, you add all in, the low volume on this rally, all these things start adding up and painting a very clear picture of something's fishy here, right? If we put volume back on there, you can see that, it's just been declining on this whole rally. So, yeah, it doesn't look great, guys. Does not look great at all. And if we do take a look at the weekly chart, what I want to do is just take a look at a clean weekly chart. So let me pull up a clean one. And I'm going to actually pull up a different exchange just so I don't have to redraw everything here on my other one. All right, so let's take a look at Binance. We're going to take RSI off of there. And what I'm going to do is I'm going to put momentum on there. And I talked about this. I think I talked about this yesterday. I could be wrong. So if I'm wrong, I apologize. I know I talked about this on my membership, like my Patron and stuff. But here we had momentum, okay? For the last almost 2 years, there's been people who have consistently been bullish on Bitcoin and consistently try to say, momentum is up, momentum is up, momentum is up. Momentum is not up, and momentum has not been up for a very long time, right? Momentum peaked at the all-time high in December of 2017, and after that, it's been in a steady decline ever since. So we didn't really have a trend line to go off of as far as a resistance line in 2019 because it hadn't really made any more peaks since then. It's just been grinding sideways. But once it made this peak in July of 2019, then we can draw a trend line. And let's get this matched up. You'll see how uncanny this stuff is. So here was December of 2017. Here was July of 2019. So when it rallied back in February of this year, and people were getting super duper bullish and saying the bottom was in, right? There I was, myself and a few other bears, right? Kind of like the lone men standing. Like, what are you guys talking about? This thing is not bullish right now. And part of the reason that I was able to do that, they all have their own strategies, but part of the reason I was able to do that was using simple things like trend lines, right? And all this did was come up and retest resistance. And you can see that, just as an example, if somebody had shorted this, right, they would have been short at 99.36. And within 3 weeks, they could have pocketed 60%. Look at this. It dumped 61.94% because momentum has been declining this entire time. It is not going up, guys. And during this rally, we can look and say, hey, look, volume is going down, but price is going up. What's up with that? We can look and say, there's all this rising wedge pattern. It's bearish in nature. We can look at this and say, we just got a down and an impulsive up. It looks like a counter trend rally. All bearish signs. And then we look down here at momentum and look at this. Here's price moving up, but momentum is not moving up. It's not. It had a little bump up here, and then it just started moving right back down. So you got a lower high, a lower low, and a lower high. That's what you have. This is a weekly chart, right? It's very, very plain to see that. Now, it doesn't guarantee anything, right? There's always these people that come out and say, okay, well, you don't have a crystal ball. No, I don't, right? Things can change. They can change on a dime in any market, and cryptocurrency is no exception. But when I look at this, there is nothing that makes me want to invest. In fact, I've got to be totally transparent with you and tell you that most days I feel a little sketchy even having the small amount of Bitcoin I have in that HODL fund, right? You guys hear me talk about that once in a while. I've got that small amount of Bitcoin set to the side in case I'm wrong. And I have that small amount of Bitcoin that I use to trade, right? So it's like there are days where I consider even selling all of that, right? It just looks that bad, right? I mean, maybe I'm wrong, but when I look at the stock market looks terrible. When I look at cryptocurrency is following the stock market. Plus, even if it wasn't following the stock market, right? You've got all these bearish things going on. So just, just be careful, I guess. We don't know where this thing is going. And the other reality to this is this. If we put this on a monthly chart, and people aren't going to like this, but this is just reality. If we put this on a monthly chart, and I'm going to use Bitstamp just because they have more history than Binance does. Watch what happens. We can do the same thing. We can draw this as one large trend, okay, with this being a counter rally inside of a bear market. And if we do, and we draw from the top in 2017 to the bottom in 2018 to the peak in 2019, which, by the way, came right up to the 61.8 Fibonacci level. If you follow the channel, you've probably seen me talk about that in the past. Right inside the golden pocket, right inside the short zone, right? And here we are doing it again. So if this is the trend, and since it's a long trend over the course of over 2 years, I want to put this on a log chart, it gives us a target down around $2,200. Now, it's not as bad as $1,300, right? But that first target's going to be down around $2,200. Something to pay attention to, okay? And in fact, I'm going to put this over on Coinbase just so you guys can see this. We want to do a Fibonacci extension, down, up, log chart, right? Yeah. Look at this. You see this? So it came up when it had its little false bottom. It was right on top of this line here. Had its little dead cat bounce, came down, found support right on the 61.8 here. Up it went, right? So if it comes down, don't be surprised if it comes down to this number down here around 2,200 bucks. Okay. And if things get really hairy, it could come down to 13.19, which lines up with the smaller trend target. So lots and lots of bearish stuff. Now, there are going to be people who say, well, you just got to zoom out, bro. Just look at the bigger time frame. So let's look at a yearly chart. Okay. This is a yearly chart. Does this look bullish to you? If these were daily candles on a coin or an asset, would you say, oh man, that looks super bullish? Would you? I don't think you would, right? You wouldn't, right? Look at this. This is 2017. Here's where it closed at. Here's 2018. So we had, you know, the big red candle. That in itself's not a problem. In an uptrend, you will get down and up, right? So if this had started moving back up, cool. But in 2019, what actually happened was it came up, and do you see at the top of the wick? The wick literally stopped exactly on the 2017 close. Okay, 2017 closed at $13,863. In 2019, price topped out at $13,868. $5 difference. All right, so that was a sound rejection. Moved down with an absolutely huge wick, right, which is not what you want to see. A wick is a sign that the bulls are exhausted, just like a tail is a sign that bears are exhausted. So we have this wick, which means bulls are looking exhausted, and here we are in 2020, and we've started to go up strong, right, and then we collapsed. And now we're slowly just kind of sitting here, putting in, so far, what is a spinning top. Now we're in April. There's 8 months left in the year, so this doesn't mean jack crap. This candle here means nothing because we have no idea what it's going to look like when it closes. But we do know that this candle here, and this candle here are all closed, and we know that this candle here was soundly rejected at the 2017 high. This is bearish, okay? This is not bullish. If I saw that on an hourly chart or a 4-hour chart or a daily chart, I wouldn't be going, oh man, I can't wait to long that, right? And I don't think you would either. I think if you're honest with yourself and you step back and take away the hopium and take away, you know, what you want to happen, I think you would agree that this is bad news. So time will tell. But that's where I stand on everything. I want to do a video. I want to do it very relaxed and just kind of, you know, really walk through the explanations and say, look, this is why I think this. Not just because of the technical analysis, but because of the world events and because of the economic situation and because of, you know, the data that's coming out of China with the slow economic recovery, right? All of these things are painting a picture where it's going to get worse before it gets better. I do think it'll get better eventually, but I think it's going to get worse first. And I think it may be a lot worse than what people expect. I just think most people are very complacent. I think most people have grown up in an age where, you know, the strategy has always been, you know, don't take your money out. Don't worry. It always goes back up. If anything, when it pulls back, just buy more. And I think this may be the time where the rug is pulled out from under people's feet, unfortunately. So we will see. All right. With all that being said, guys, please remember that I am just some guy sitting in a spare bedroom. So nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency or the stock market. If you enjoyed the video, please do me a favor and make sure and hit that thumbs up button. Make sure you subscribe to the channel and make sure you check the description for a link where you can join the Patron and help support the channel, as well as get access to more frequent updates. This is James with Crypto Common Sense reminding you to please trade safe.